and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Simon Gergel, manager of the Merchants Trust. Hi Simon.
Hello.
So UK equities, UK equity income no less, the most sought out sector of all of them as far as investors are concerned since interest rates have been so low. Let's start with interest rates because there's much murmuring that we are going to have an interest rate rise at the end of this year or the beginning of next year. Do you see that as an opportunity or perhaps a headwind for UK equity income?
Well, I think you're right. We're at that stage where we are getting close to that point. I don't necessarily see it as a headwind or an opportunity in itself, but I think it is indicative of an economy that's gradually recovering. So hopefully we do get an interest rate because that means that the economy has continued to grow, create jobs and potentially lead to inflation gradually starting to pick up. So I think we're quite well positioned for an interest rate rise. We've been thinking about that for a long time, about what it might do to stocks and valuations. And so we are not worried about that. I'd be more concerned if you don't get an interest rate rise.
Looking then at the portfolio, had a really good run this year up until about May, and then it's been, there's been less of a rally since then. There's been some decline. What has caused that shift?
I think there's been a number of factors. The one that most people cite is the slowdown in growth in China, and the commodity markets have been weak. But that's been going on for a while. Commodity markets have been weakening for 2 or 3 years. Chinese growth has been slowing, and China's been trying to reorganize its economy away from investment towards consumption. But for some reason the markets got worried about it. The markets started to get worried about US interest rates going up. But I don't think there's any fundamental problem as far as we look at it. I mean, we look at the US economy recovering, the UK economy recovering, Europe starting to turn around. We're not talking about strong growth, but we see a reasonable economic outlook. And so we see this sell-off in the market as an opportunity rather than a problem.
And also, your trust is one that does offer income, and along the way there may be some capital volatility because your priority is not growth, it is income, and so perhaps that has a slightly different shape in the line graph.
Well, we try to deliver both income and total return, capital return. But you're right, we have a strong focus on companies that can deliver a high yield to start with, and income is a big part of the total return that investors get over time.
And where are you seeing those great income opportunities then?
Probably in 2 different areas. So one area are the very large companies, the mega caps, companies like GlaxoSmithKline, Royal Dutch Shell, HSBC. They're offering really high yields today, and we don't think those yields are sustainable. And we believe those companies are cheap. So that's one area. And almost at the other extreme, some of the recovery situations where current trading's difficult under pressure, but where there is good long-term value. And so we see a whole range of companies, some of the UK construction companies, a recruitment company, industrial property, lots of different areas where the longer term potential isn't reflected in the share price.
And you said long term there twice.
Sorry.
No, it's good. It's a good indicator of how you are looking at these investments because, the UK stock market has had a fantastic rally since the credit crisis, but then it is the nature of market cycles that perhaps now we are in for a bit more of a bumpy ride, and so taking long term view is key.
Yeah, I mean, if you look at the FTSE 100 index, it's below where it was at the turn of the century, so 15 years. It did briefly, a couple of months ago, get above the all-time high, but it's gone nowhere for 15 years. Admittedly, it was expensive in 2000, but it's not expensive now. It's quite cheap. In fact, as of today, the market looks really quite good value, particularly some of those big stocks.
So opportunities.
Yeah, absolutely.
Simon, thank you very much.
Pleasure.
This is Emma Wall from Morningstar. Thank you for watching.